Perfect. And thanks for the opportunity to talk to everybody. I think I'll even be able to give a minute back since I know we're right before break. It's funny, it's still, climate tech feels a lot bigger than it used to, but it's still a small world. I'm honored to follow Andreas. He and I actually worked together at Opera a number of years ago and haven't seen each other for a number of years, but I love seeing talented executives that are moving into sectors that are areas of passion for them. So that's great to see. As Jan mentioned, I'm Matthew Chagan. I'm one of two partners at a firm, Sustainable Future Ventures. We're a London-based venture capital firm focused on late seed through Series B investing. My goal today is going to be the same as probably all the other venture capital firms, which is fundamentally, I want founders and other VCs to reach out to us when they see opportunities to invest in high growth, high quality companies where we can be a value add investor. My challenge today is to give you a little bit of how we position ourselves versus the other very talented venture capital firms in the space. So the light bulb goes off at the right time. I think the good news is we've got a different story than a lot of other venture capital firms, which we think will hopefully make it easier to position us versus others. So as I mentioned, we're focused on this intersection between the built environment and climate tech. The high-level idea, which is probably very familiar to you all, is a multi-trillion-dollar space in terms of real estate and infrastructure that needs to go through a significant transition to achieve Paris and other climate goals. We are an independent venture capital firm, but we sit within the four walls of a large asset manager called Patrizia. What does that mean? I'm biased, but I would argue that I think we get fundamentally the best of both worlds. So we are focused on returns, which means that we align well with founders and other venture capital firms. There's no strategic debt that we own to our parent company where we need to look to invest to acquire, or we need business unit sponsorship. We're purely aligned with you all in investing in the best and highest growth companies. But our relationship with Patrizia and other strategic LPs means they have a vested interest in the success of our portfolio. So we believe we can deliver really interesting strategic value to our portfolio companies. And so, what does that mean? What is the strategic partnership that sits behind us? I'll focus on Patrizia, although we've got other family offices and pension funds that also have that real estate lens. But fundamentally, Patrizia has roughly 50 billion in assets spread primarily throughout Europe and the UK. Those assets sit in the traditional categories: residential, office space, and commercial and industrial, so distribution centers and warehouses. They also have roughly $10 billion in infrastructure. Some of that is traditional infrastructure, wastewater treatment, ports, et cetera. A lot of it, though, sits in the sustainable infrastructure space. So we've got a number of biomass facilities. We purchased a biofuel business. We're looking at smart city initiatives as well. So all of the individuals across that, several thousand people that work for Patrizia are all very focused on their day jobs, which is optimizing those assets and achieving goals of transitioning them from brown-gray assets to green. So you have a very receptive audience that's very aligned with what a lot of climate tech companies are looking to achieve today. And so we have a very receptive audience when you have a company that says, I want to engage with somebody that's looked to install storage in office buildings in Europe, or I'm looking at, I've got a company that's installing PV and batteries on rooftops in commercial and industrial. These are very easy conversations for us to have because we've got a number of folks that are leaning in. We can navigate these, the company generally. There's a team of 6 of us. My colleague Reed Carroll, who you can see there on the right, is here today as well. The 5 of us are based in the UK. Laura is based in Hamburg. So we've got both Europe and the UK. We have 7 portfolio companies, although we should have a couple more to announce in the next couple of days. I think what I want to get out of this is not that we think we've got a great portfolio, which we do. Pico is here today, which is great, but it's that the companies that you might suspect would be focused on the built environment are not necessarily the ones that you see here. We don't want to be pigeonholed into this idea that we're focused on smart building software. So some of the companies you'll see that are very traditionally at that intersection, so Modulus, which is factory-free modular housing, Brick Lane, which is a platform for institutional investors to buy and do upgrades for single-family residences and individual apartments that need upgrades in terms of ESG compliance. Those look very traditional. Others like Gradient, which is an alternative form factor heat pump, makes sense as well. Others like Pico might be a bit off-piste, so to speak, because you'd say, well, this is software to enable grid operators to run flexibility markets. But in our mind, the built environment can play a really important role in companies, even if the ultimate consumer of the technology is not in the built environment. So we want the light bulb to go off more often than not. What are we excited about? This speaks to this point as well. Again, some spaces like retrofitting, I think you would expect. Other spaces like next-gen grid, you might not. So this gives you a little idea of what we're fundamentally excited about. And that's all. So I'll give you back a minute. Thanks all. Appreciate the time.